Today's press conference is devoted to the presentation of the November inflation report, and in this part, after a short speech, I will give the floor to Mr. Branko Hinic, then to Vice Governor Veselin Pješčić, and my wonderful colleagues Snežana Vilaret, Mirjana Miletic, and Mirko Đukić. But first of all, I would like to tell you that finally, once we finish the selection and appointment of all governing bodies of the National Bank of Serbia, we may embark on a new practice of addressing the public. Have you noticed any difference since August to date? We will talk about this and discuss in detail when the newly appointed Council of the National Bank of Serbia, and now I would like to use this opportunity to greet the President of the Council, Nebojša Savić, and colleague Miladin Kovačević, who are here today with us. So once we constitute that Council by holding a joint meeting together with all members of the former Council, and when I present the results and the remarks and the tasks that we plan to implement in the coming period, once we do all that, we can discuss it with you. Until then, I would kindly ask you for your understanding and for the exclusivity of your reports cannot come before the hierarchy of the people that we wish to cooperate with in accordance with the law. What you have probably noticed is are some of the headlines in the media which are not argumented and which speak about the withdrawal of capital and about some developments in the financial system. And in this part, I see no bad intention, but only a result of the insufficient activity of the National Bank of Serbia, which did not make a sufficient effort to explain to the public what deleveraging is and what is the withdrawal of capital. On this new line of addressing the public, where communication with the public, primarily with you, and with the citizens, we want to do much more because our primary task, the inflation targeting, largely depends and is largely connected to inflation expectations, that is, to presenting to the public of what we do at the National Bank of Serbia, and we want to assure you that we are confident that we are keeping things under control and we are not allowing the spillover of the effects of price shocks and price pressures from agricultural commodities and administered prices and the spillover of the effects from abroad to other prices, because we want to ensure stability and we want to ensure stability and a favorable investment climate. In this, we are aided by our colleague Bojana Jager-Marković, and she also helps you to understand all the things that are happening at the National Bank of Serbia and all the developments in the financial sector. I'm sure that her contribution is appreciable. Due to the complexity of the tasks of the National Bank of Serbia, it would not be good for either you or for us to have any things that are not understood well. We want to show you that behind all the National Bank of Serbia's decisions and mathematical models, what lies behind it is a good intention to do what is the best thing for our economy and for all of us. The isolation of the National Bank of Serbia and the details of its policy have prevented the National Bank of Serbia from being a part of a whole and from understanding that it is not a purpose in itself, and that this whole, I think, is now achieved and is present, and this latest inflation report will assure you of this. So this sense of being a part of a whole that we have already built at our meetings of the Executive Board. I'm sure that we will be able to present this to the overall public of the Republic of Serbia, and we are here working on the same task. We do not want to fuel any misunderstandings, and we don't want the National Bank of Serbia to be isolated. I want to draw your attention that the alienation of supervision, which we are now returning under the auspices of the National Bank of Serbia, wishing the measures of monetary policy and prudential measures to be coordinated in a way so as to contribute, so as to provide maximum contribution to financial stability. Maybe I could illustrate this in my usual way. The National Bank of Serbia at Kralja Petra Street will not be a palace where there are many court intrigues, and this building at the Slavia building will be a place where the real authority is. No, the National Bank of Serbia has two buildings at Kralja Petra Street and at the Slavia Square. It also has the Institute for Manufacturing Banknotes and Coins and many branches throughout Serbia, but this is one single institution which aims to contribute to financial stability. And I would like to add just one more sentence. We do not see the International Monetary Fund as an teacher, some stringent teachers, even though during the past months we had discussions about the central bank law. Now I would like to thank everybody who was well-intentioned to discuss and to exchange arguments behind the closed doors. And I'm really thankful to them because now we have finalized amendments and supplements to the National Bank of Serbia, which have reinforced the accountability and the autonomy and independence of the National Bank of Serbia. And of course, the National Bank of Serbia remains accountable to the National Assembly and to the citizens who are appointing its management. Now I will give the floor to Mr. Branko Hinic, but first I have to say that inflation has reached 12.9% in October. It is above the target, but I will give the floor to him to give you the details behind this increase, and he will explain the measures that the National Bank of Serbia will undertake in order to counter that inflation. The research of Branko Hinic's team gives us the data and advice, not only to us, but to the government of the Republic of Serbia. And the government will, on its part, by improving its agrarian policy, commodity reserves policy, and agricultural and competition protection policy, will help us to target inflation better and to prevent the shocks of this kind. What I would also like to say is that we are quite confident that as of the second quarter of 2013, inflation will head back and will return within the target tolerance band by the end of that year, thanks to the team who knows what it is doing and who is determined to do its job best. We have raised the key policy rate from 9.5% to 10.95%, and we have also raised the dinar share of allocations under foreign exchange required reserves, showing that that we are trying to bring inflation within the target tolerance band by using traditional measures. So there are things that we cannot affect. We are one stakeholder in this, and the government is the other stakeholder. And the government will help us achieve this. Our advantage is that we can respond quickly as monetary policy makers, and we can respond we can apply the measures that I have mentioned to direct impulses from the market. The government does not have this power, but the National Bank of Serbia has its three ladies, which preserved the key policy rate at 10.95%. We do not want to raise it to 11% because we do not want to spark expectations that we cannot keep inflation under control. I've talked too much. I hope my colleague Branko Hinic will not take this amiss. Once again, I would like to greet you all and welcome you to this presentation and tell you that I expect us to continue to cooperate well in the future. Mr. Hinic, the floor is yours. Ladies and gentlemen, esteemed members of the press and fellow economists, the current year has been marked by high inflation and a fall in economic activity. Unfavorable economic developments are attributable to bad weather conditions, growth in global food prices, fiscal expansion in the first half of the year, and a slower economic recovery in Serbia's key trading partners. We expect the situation will improve next year, both in terms of price and general macroeconomic stability, and in terms of economic growth. The current macroeconomic indicators for the euro area are not favorable either, and the 2013 forecasts of its growth and growth worldwide are lower than several months ago. On the other hand, international financial markets are calming down in response to the ECB and Fed's accommodative monetary policy measures, announced purchases of sovereign bonds, and step towards unified banking supervision in euro area member states. The announced fiscal consolidation at home and buoyed liquidity in the international financial market have bolstered investor interest in Serbia and pushed down the yields on Serbia's euro bonds. This indicates that the country risk premium is falling despite the August downgrade in Serbia's credit rating. In addition to the mentioned fall in the country risk premium, the key factors behind the strengthening of the dinar over the past 2 months have been restrictive monetary policy measures and the approval of subsidized loans to the corporate sector. Looking ahead, the perception of foreign investors will continue to depend most on the credibility of fiscal policy and sustainability of public debt. The National Bank of Serbia thinks the fiscal consolidation measures are a step in the right direction and expects that they will be supported by an agreement with the International Monetary Fund. This would send a positive signal to foreign investors, ease uncertainties surrounding the outlook for macroeconomic policy, and additionally contribute to the lowering of the country risk premium. Based on available data on expected yields, the National Bank of Serbia estimates that this year's agricultural production will be by around 1/5 lower than in 2011, which represents a drop 3 times steeper than in the drought years of 2003 and 2007. The downturn being significantly steeper relative to our expectations stated in the August inflation report, we have revised our GDP growth projection for 2012 from -0.5% to -2%. At the same time, the low base this year makes the potential for agricultural production growth next year much higher. This is why we have kept our GDP growth projection for 2013 at 2.5%, despite the cutback in global growth forecasts. On the expenditure side, the economic contraction in 2012 is due to the drop in domestic private demand, consumption and investment alike. By contrast, government consumption, chiefly in the first half of the year, will provide a positive contribution. Even though the spurred imports in that period and the poor agricultural yield and weak conjuncture in the international environment are affecting our exports, the contribution of net exports this year is likely to be positive, owing to the export of automobiles and the past weakening of the dinar. Consistent with the fiscal consolidation measures, in 2013 we expect a fall in government consumption, while the high unemployment rate and the anticipated drop in real household income will have a dampening effect on private consumption too. On the other hand, a significant contribution to economic growth next year will come from export-oriented branches of the economy, the automobile industry in particular. Despite the fall in domestic consumption, we expect a modest growth in imports next year, driven by imports of intermediate goods for the needs of automobile industry and imports of equipment for investment purposes.
As the Governor emphasized, after rising for 6 months, inflation reached 12.9% in October. The growth in prices was particularly pronounced in the last 2 months, notably food prices, which was expected given the long-lasting drought and rising prices of raw materials for their production. However, the intensity of these price hikes, which was more robust both compared to our expectations and countries in the region, poses the question of adequacy of competition protection policy, commodity reserves policy and agrarian policy. The one-off increase in a large number of products, making up 2/3 of the consumer price index basket, was also driven by the October increase in VAT from 18% to 20% and the extraordinary rise in excises on cigarettes and petroleum products. After staying flat for 1 year, administered prices were raised in October. Public transportation and utility services in some towns. Inflationary pressures were further fueled by the lagged effects of the past depreciation of the dinar. Nevertheless, we estimate that the inflationary shock is behind us and that monthly inflation rates will slow down starting from November, while a rise in year-on-year inflation due to the low base will continue in the months to come. We expect year-on-year inflation to decline as of the second quarter of 2013 and to return within the target tolerance band by the end of 2013. Food prices will rise for some time yet. However, with the new agricultural season and the expected cheapening of primary agricultural commodities as of the second quarter of 2013, food prices will contribute to a drop in year-on-year inflation. Prices of fruits and vegetables will directly drag down inflation, particularly in May and June, while cheapening of primary agricultural commodities, such as wheat and corn, will have a gradual effect through falling costs in the production of processed food. The effects of past depreciation of the dinar have been almost fully exhausted, and we expect no further inflationary pressures from this source. Price growth will slow down, also largely on account of the exceptionally low aggregate demand because of plummeting real household income and a high unemployment rate. On the other hand, the months to come are likely to experience a rise in some administered prices, which will compensate for the absence of their adjustment in the past period. Ladies and gentlemen, owing to supply-side shocks, such as the agricultural shock and VAT increase, monetary policy of the National Bank of Serbia aims to mitigate the spillover of the price growth caused by such shocks to other prices through rising inflation expectations. This is the main rationale behind our restrictive measures, that is, raises in the key policy rate from total 9.5% to 10.95%, and the increase in the dinar portion of allocated foreign exchange required reserves. Measures of the National Bank of Serbia will continue to be oriented to lowering inflation within the target tolerance band, which equals 4 ± 1.5%. In our opinion, measures of the central bank towards preserving medium-term price and financial stability and government's measures aimed at public finance consolidation are the best way to help the economy in the current circumstances, as they will lower the country's risk and borrowing costs and make the business and investment conditions more stable.
investiranja čine stabilnim.
Thank you for your attention.
Hvala na pažnji.
Do you have any questions?
Dobar dan.
Good afternoon, Mirina Brajkovic from RTS. Ms. Tabakovic, could you tell us something about the negotiations with the IMF? So they will end their visit tomorrow. So they will, as we heard, they will come in November to talk about the new arrangement. Our talks with the International Monetary Fund will end tomorrow with the final meeting at 9 o'clock. We have had concrete talks with vice governors individually in relation to financial stability and other issues. And a part concerning the National Bank could indicate that there are some certain possibilities that the arrangement will be concluded. However, I have no information and I have no data about that. I don't know to what extent there is an agreement with the figures that have been prepared in the budget for the next year. And I wouldn't like to give my express opinions on this because I'm obliged in terms of the correctness of the IMF team and their representatives in regard to what has been one of the toughest elements in the first 3 months. And this is whether our central bank law is in line with world standards and independence of monetary policy. So we have no intention to talk about this in more detail. The IMF will issue a statement. I can express my satisfaction with the talks that we have had so far. And I would like to praise particularly their knowledge about our problems and all issues, so we really go into detail because we don't talk at any superficial level. We really go into depth, and for the last several days they have had a lot of work, and I do expect that the final meeting tomorrow will result in some concrete date in terms of some future negotiations, but I cannot tell you anything more. I have to say that the assistance of the IMF as an advisor, as an associate, is always welcome, not only because the government has inherited such a high deficit, which is impossible to finance in other way but through borrowing, but because it is always good to re-examine the data that you have, the records that you keep, the way in which you cover data and so on, because we need to ensure this comparability with the rest of the world. So I have to say that the International Monetary Fund, headed by Ms. Zuzana Murgazova and her team, who are here today in Belgrade, and Mr. Dmitry is also here, who deals with central bank issues. So I have to say that we are highly satisfied with our cooperation with the IMF. Marko Subotic, Al Jazeera. Ms. Tabakovic, do you have data on the level of indebtedness of our country? Has 60% been exceeded? So I believe we borrowed 1.5 billion euros in bonds. Then we need to get a loan from Russia. And it seems that all this will go into current consumption, as announced by Minister Dinkic. Am I worried? Well, yes, I am, primarily because the data expressed were not the real ones. And that was the reason why the last time the IMF left our country, I can say, and suspended the talks. It is very important to know the diagnosis of the current condition. So the deficit equals 6.8%, as said by the Minister of Finance. And we know that the quasi-fiscal deficits were not covered, and not even the real deficits which should have been presented. And when you have a budget gap, you need to compensate it, but also at the same time you have to function as a state, and in that case you need to borrow. Are you going to stop paying wages to teachers, to policemen and so on, or will you stop paying interest and due liabilities to foreign creditors? Of course not. And we expect a fiscal consolidation implemented by the government, meaning that the government has to monitor the behavior and all the developments, and this should be put under control. And by disposing of money that flows into the budget, the government should take care about the investment avenues of that money. So this the percentage of exceeding the public debt and the overall external debt of our country. So this figure is available to everyone. It is also available on our website. Yes, it is high. Total external debt is over 80%. Public debt has also exceeded the boundaries permitted and possible. What I'm worried about is that we have high liquidity. When I say we, I'm referring to banks, and at the same time we don't have those who want to take loans so that we could continue production or start up production in order to produce in export-oriented industries which can provide the lacking FX funds for this country. And if this were in place, we wouldn't be worried so much about the level of debt. What I'm worried about is that we don't have stable conditions. And once you come to any function, you're asking me what conditions did you find in your bank, in your television, and so on. Actually, you have to start from the position when you record the current situation, and you need to start solving problems. The way of solving problems right now is to borrow, and we are happy that the last sale of the Eurobond was implemented, was successful, and Mr. Veselin Pješčić and Ms. Vilaret took part in this sale, and the last sale of the Eurobond really had a significantly lower price than earlier borrowings, although our credit rating is not so high. And my colleague Veselin is happy that we will have around 500 million euros in our FX reserves. Once the government has to pay for its debt, we will have excess liquidity, which will actually cost us more. But this is life, and we need to solve problems in this way. I'm worried that we have no production and that we have no security. And in general, I'm worried about I'm not going to use any economic term, but I have to say that all this affects us as dented demand from countries with which we have had traditionally the best economic relations. So we worry about this, and we can't influence this apart from creating stable business conditions for those who operate here and for those who wish to come to our country to work here.
Milica Rilka from Radio Belgrade. I wanted to ask the governor whether the fact that you have noticed that banks are liquid but nobody is requesting any loans, is this the answer to the question that you have touched at the very start, and that is that banks are only reducing their exposure, that they're not withdrawing capital from the country? Banks are not withdrawing from this market. There are only announcements, for instance, that Hypo Group will withdraw from a